coming to your conference, because that's the big conference which you host every year. This is the 20th year that you're hosting the conference.
Yes.
I was just looking at some numbers, and it gives me a sense that, the investor community which is going to be at the conference, that manages close to $18 trillion of money. That's a big sum.
Yes.
That the investors manage globally, and of course part of it is for India as well. You interacted with a lot of your international clients as well. Broadly, what is the sense you get when you talk to international clients towards India?
There is definitely what they call now FOMO. Now there's a phrase for that, fear of missing out. To be honest, I don't think that people had really given up on India even during demonetization. Right? So there was some selling which happened, which was more the macro traders punting the market. But the more medium-term investors had remained stuck. I mean, they were a bit unhappy about earnings downgrades and all of that, which could be triggered by demonetization, but they were all pretty much there. Because, that there is no alternative story, that on a medium-term basis, an economy this size, there is nothing else which can come close to India. So I think they've been around. What we are seeing in terms of flows is something that all EMs are seeing. It's in that way very much an Asia or an EM trade that we are seeing. And I don't see a big catch-up really happening. Well, people are still overweight India, right? And so I don't expect that to happen. In terms of sentiment, I would say that the next steps from the government in terms of the reform momentum, people are looking at how the economy adjusts around GST. There's a lot of fascinating stuff happening at the state level. I think those would be the developments that investors would really look out for.
To your mind, what could be the near-term solutions to just make sure that this whole NPA mess in the banking system is taken care of?
The first time in a long time, we actually have a surfeit of domestic savings. Right. Now you have to figure out how to lend, right? So you have demand somewhere, you have supply somewhere. Now how do you get it there? The problem with 70% of our banking system, or let's say, if you remove the larger PSU banks, say 35-40% of the banking system, is that they're not agile enough, that they're not motivated enough, they're not incentivized enough to learn those skills and sort of shape themselves. And that's something that the government has to do. So while the NPA problem is something which is very serious, I think it is a much more systemic issue of allowing. So I think you may also see the government taking some steps in order to institutionalize, or rather put some regulatory pressure behind the financial system, not just the banking system, but the financial system, to get credit to where it's actually needed.
The consumption theme, where a lot of the consumption stocks really did well on the back of the rural demand and the rural push, will that be under pressure?
Yeah, so what the consumer survey found was that at the lower end of the income spectrum, confidence level have dipped very sharply. So there's been a deterioration, but it was done during the period of demonetization. So I guess it affected every segment, but the worst affected are the ones which are the lower income segments. And this is something that we have been highlighting and we've been observing for almost a year, where soaps are not selling, but cars are selling. Two-wheelers are not selling, but cars are selling. So consumer discretionary is doing okay, consumer staples are not doing okay. So the broad base, I mean, the fact that nearly half our population is still in agriculture, and now they're being forced out of agriculture, is something that affects the staples income growth. What that does from a policy making perspective is that it puts a huge challenge of job creation for the government. There are 6 to 7 million people who will exit agriculture every year. Right? So the government cannot rely on the corporate sector to create jobs. So therefore it has to focus on micro enterprises and their creation. So I think you will see some policy action. You should see some policy action. I mean, I'm hoping that the government is working on it.
Sure. The UP election was a big surprise on the positive side. Should one read too much into it and extrapolate that to the 2019 national elections? Because I guess that's the question even your global investors are going to ask you. What's your view there?
Far more important is that UP is a sixth of India's population. Sure. It controls a budget, a state budget, which is nearly 20% that of the central budget. Okay. And if you don't get UP and Bihar right, you can't get India right. Okay. Because, nearly 31% of the population below the age of 6, so that so-called demographic dividend, is in these two states. Okay. So if the BJP, and see, it happens with the lakhs. These are massive, massive places, right? You can't reform them with a turn of a key, right? If the BJP can manage this state well and do the basic things right, improve law and order, make sure electricity is available, make sure roads are good, I think we could have a very, very strong medium-term outlook on India.
Okay. Will that change the outlook for a lot of the, the sovereign funds or the long-only funds? Typically, you take a 8-year, 10-year view on any country. Given that there's going to be a likely stability in terms of policy reforms and a stable government at the center, I know you track a lot of the sovereign flows as well at CS. In terms of perspective or outlook towards India, will that change given that there's going to be stability now? Assumed stability for the next 7-8 years from now?
To be fair, I think that assumption has already been there.
Okay.
So, to be fair,
has that been validated further with the strong UP elections?
So you can say that. Okay. You can say that there is a certain visibility. Elections actually speak a lot about the people.
True.
Right? And especially in a democracy, I think what the people speak for, of course, what also matters is how you interpret their voting behavior.
Sure.
I mean, it's not always the same thing, but it says a lot about what people desire, right? And that's a great thing. So I think that their conviction, if at all, would have been helped by the verdict that we saw in UP.
Okay. Now to the global point. The theme this year at your conference as well is titled called The Beginning of a New Era. What does it mean? Is it going to be for all of Asia, or does it specifically mean there's going to be a change in era for India?
No, it's not just for Asia or India, it's actually for the world. I mean, it's a completely globalized world, and now there are questions being raised on whether we have had too much of globalization. Okay. Right? I'm not taking a stand on it, but that's a question, and it's a genuine question being asked. There are battles being fought in almost every country.
Correct. And everybody seems to be now looking at protecting their own territory, protecting their own jobs.
Let's not say everyone. Let's not say everyone, but
the larger economies are especially looking at it.
And game theory would say that even if one or two large economies start doing that, then everyone starts doing that.
Correct.
Right? On the other hand, what can also happen is that there could be parallel groupings that come up.
Sure.
Because China is now promoting open trade and trying to, so there is a lot of fascinating change. So which is why I think the theme was that this is more of a new era, because technology is enabling things which we never thought were possible even 3-4 years back. We are seeing political change which we would have ruled out even 6 months back. We are seeing global trade. We are seeing geopolitics affect prices of commodities, and that has a huge impact on which way the capital is flowing, how the trade is working out. So I think this is a very interesting time to be listening to big experts. We would have never thought that interest rates would not stay at zero for forever. Right now we are finally seeing a reflation trade come through. There is a big challenge for everyone, and not just India or China or the developed world, but for everyone, that in this era of automation or the sharing economy and so on and so forth, how do you manage the growing income inequality? Sure. These are all of these are themes and sessions at our conference.
Sure.
And then we have some very, very good lineup of speakers to talk about them.
From here, what would be your best case scenario? A 10 to 15% upside even from current levels, or probably you'll see a bit of toppish market for the rest of the year and probably a bit of a downside risk, given that the earnings are not going to be supported? There is
a lot still that needs to happen the world over, right? I mean, so for now, so we have to see how the French elections throw up good results or bad results. Right now, there's a sense of relief that the Dutch elections went in favor of continuity. What the French do, what the Germans do, what it does to the status of Europe. Europe is a massive economy. It is actually doing surprisingly well, and one hopes, and I think our global forecast is also that it'll continue to do well. We are seeing some very interesting positive change happen in China, which in a knee-jerk way we are all attributing to local infrastructure spending, which our China team believes is completely inappropriate. There is a lot of other things happening. For the first time in China, you're seeing very strong nominal GDP growth, like 13% nominal GDP growth in an economy like China, where they've been struggling with a lot of debt, is actually a huge relief. That could trigger more positive. And while China is already a very large economy, in terms of per capita GDP, PPP adjusted, it is still 15 years behind Mexico, right? So there's a long way to go. So these are the things that I would rather look at, and therefore there's a lot happening globally, I think, which the markets need to factor in. Domestically, we'll have to wait and see, because as the unfortunate thing, or rather, from a certainty perspective, is that just about the time that we can say for sure that the demonetization disruption is behind us, that the inventory cycles and the supply chain adjustments for GST will start happening. So this is a year where I've been saying from the beginning that it will be a year where the markets are a bit disoriented. You will not know what is sustainable and what is a one-off. And this is generally not a time where you see a lot of logic in the market. So because of flows, you could see excessive highs. So I'm deliberately avoiding that question whether we're going to see 15% higher before we correct, or we correct from here.
Okay. So finally, while you spoke about flows being very strong, from a domestic side, does it look like it's going to sustain, given that the savings ratio has gone up, and that's where probably lot of the money is coming back into the equity markets. Is that sustainable, you think?
The nature of flows suggests that it may not sustain at these levels, but I think it will sustain, because I fear that there is a lot of mis-selling happening as well.
Okay.
So if you look at year-on-year numbers, in February the BSE 500 was up 35% year-on-year, right? So you go and show someone a chart, see fixed deposit 6% or 5%, and see you get 35% return here. Most people, while they understand what mutual funds are now, there's been a lot of very good education that has been done by the industry, but it could be misleading. So by June, July, you could actually see that momentum wavering off. Okay. So my sense is that it will come down a bit, but this surge in financial savings, I think, is a structural change, and one hopes that disappointment with this doesn't push people back into things like gold and real estate.
Okay. Neelkanth, always a pleasure talking to you. Thank you very much for joining us. Thank you. Thanks.